Dear friends, welcome to weekly view on markets. Markets continued their uptrend during this week and gained around 2.19% during this week. Last week also market gained more than 2%. So all indices and all sectors gained due to broad-based buying by both FIIs and DIIs during this week. Record dividend given by RBI to the government has triggered the rally in this week. Also, forex reserves of RBI has touched the all-time high, and RBI also holds record level of gold reserves. This gave confidence to FIIs, and they bought during this week after many months of selling. Also, chart patterns show healthy structure and market is pricing in a stable government formation after the election results and continuation of the policies and the reforms of the government. Markets will be focused on election results in the next week. Markets may correct if there is any surprise in the election results. If it is as per the expected line, then market will continue their uptrend. Let us look at level of indices. Nifty closed at 22,957. It gained 491 points, that is 2.19%. It touched 23,000 intraday but closed at 22,957. Bank Nifty has closed at 48,971, that is up by 856 points, 1.78%. Mid-cap index has closed at 52,424, up by 819 points, that is 1.59%. Small cap index consolidated just with 12% up move, closed at 16,883. India VIX has further moved up. It is at 21.71. India VIX is expected to move up further before the election results. This is mainly because the option volatility premium is building up. Now let us look at different sectors. Public sector companies gained the most. PSE index gained more than 4%. Media gas companies gained 4.7%. Metal sector gained about 3.88%. PSU banks gained about 3.51%. Energy, commodities, manufacturing sectors gained more than 3%. Oil and gas, infrastructure, realty, auto companies, NBFCs all gained around 2 to 3%. Private banks gained around 1.5%. All the sectors were in the green and there was broad-based buying. Now let us look at charts. The chart structures will look very healthy. They seem to price in the election results, a stable government formation and continuation of the policies. This is a daily chart of Nifty. As we can see, Nifty after touching the lower band of this channel has started moving up and has given a big breakout. And the chart structure suggests that uptrend is intact and markets is likely to go to higher levels. This is the chart of Nifty mid-cap index. The mid-cap index also touched record levels during this week. The chart structure again remains very positive, and as long as it remains around 50,000 levels, there is nothing to worry. It is a buy on dip market, and mid cap index is likely to maintain this trend. This is a chart of Nifty small cap index. Small cap index also crossed the crucial resistance level of around 16,000. It has closed at 16,883. As long as Nifty small cap index remains above 16,000, there is nothing to worry. The chart structure is bullish, and we'll see some kind of consolidation or move in small cap index. This is the chart of Bank Nifty index. Bank Nifty index also is making higher tops, higher bottoms, and the chart structure is quite positive. We will see higher levels in Bank Nifty in the coming week. It may cross 50,000 levels if election results are as per expected. Now let us look at some of the fundamental factors of the market. The big trigger for the markets this week was RBI dividend to the government. RBI has declared a dividend of 2.11 lakh crores to the government. This is the highest ever dividend paid by RBI to government. Along with this, RBI forex reserves is at 648 billion. It is up by 4.5 billions. It is the record level. And along with that, RBI has bought around 24 tons of gold during this last 1 year, and the gold reserves of RBI are at the record level. So a strong macroeconomic factor and stability of RBI holding highest level of foreign exchange reserves, gold reserves, and giving a record level of dividend to government. This all has given lot of confidence to the market and even to the FIIs. They have turned into buying after selling for several weeks. Brent crude price is at 82.09. It has come down. It is quite steady at between 80 and 85 now. A steady crude price is good for the markets and good for Indian economy. Foreign exchange rate is at 83.10. It had gone up to 83.50 and it has come down a bit. The dollar index is at 104.75. The dollar demand globally, which is represented by dollar index, seems to be quite stable for last few weeks. That is the reason we see stability in forex rate. Gold price is at 72,440 for 10 year 24 carat. The gold prices have steadily moved up because of Ukraine war situation and again Israel and Hamas conflict. Whenever there is a global uncertainty due to these kind of events, all the central banks they buy gold and they try to enhance the gold reserves. Similarly, RBI has bought 24 tons of gold in last 1 year. Due to this global demand for the gold prices have moved up. After touching 74,000 for 10 grams, it is at 72,440. FIs, as I told earlier, have bought this week 2,166 crore in equity. DIs have been continuously buying. They have bought 6,978 crore in equity this week. Continued buying by DIs is giving a good support to Indian markets. Quarter 4 results season is almost coming to end. Overall, the results were quite good. Companies have provided favorable guidance, and earning visibility is also seen as per the management commentary of different companies. So that is why market is quite buoyed by these factors. Market is now focused on the election results. Mutual fund investors should not worry about day-to-day volatility. They should continue their SIPs. There is good retail inflows into the mutual funds, which is ensuring stability of Indian markets. The retail inflows are more than 45,000 crores into equity from mutual fund investors, and this money is coming into the markets every month. That is the reason we are seeing, despite FII selling, Indian markets are not falling like earlier years. So this is the strength of Indian investors. We should believe in our economy and the growth of our economy, and we should remain invested. So all mutual fund investors should continue their SIPs. They will get good returns in coming years. This is all for this week. If you like my video, please subscribe to my channel, share with your friends. You can ask your questions. We'll meet again next week. Thank you.